Hello, everyone. Paul Feldman, Insurance Newsnet. I am so happy to have Brian Peterson from AmeriLife here today. Talk about what they're doing at AmeriLife. You guys are doing some really cool things. So before I begin, tell me a little bit about yourself. How did you get into the industry? What type of experience, do you have? I think that a lot of people would be curious about that.
Yeah, kind of interesting. It's kind of a different way probably into the industry, but I graduated college to be a teacher and a coach. So I spent some time east side of St. Paul as a history teacher and a basketball coach. And I'll try to make it as quick as I can, but it's actually a pretty long story. So a couple years after teaching, one of my colleagues came up to me and said, "Hey, Brian, I'm starting this new job on a side job. It's kind of doing it on the weekends, but I'm making some good money, and I'd love it if maybe I could bring my sales manager and meet with you and your wife about your finances." And I said, "Well, I mean, we can certainly do that, but 2 years out of college, I got a lot of mortgage, I got a auto loan, I've got student debt, and I got credit card debt. I don't have a lot of cash, so I'm not sure what you're going to do for me." But he said, "No, that's perfect. That's what we want." So anyway, he came over. And long story short, the advice and the recommendations that they came back with a week or so after that was so just out of the realm of anything that I felt was, I guess I'd use the word truthful. I mean, I just was not happy. I mean, after they left abruptly, because I asked them to leave, I told my wife, I'm like, "Listen, if he can do this and make money in this profession with the advice he's given, what if I were to do it and do it the right way?" And about a year and a half after that, I actually left teaching to become a financial advisor. And I started with Prudential. It was called a financial service associate. And the first part was like 3 months of training down in Dallas, as well as getting all my license, life and health, P&C, Series 6, Series 65. And after that, I was a financial advisor for Prudential for several years. And after that happened, I got a call to interview at this company called Life USA, which was in the process at the time of being purchased by Allianz Life.
Mm-hmm.
And I went over there, and I didn't really want to leave what I was doing. I was making good money. I loved my job. I loved the flexibility. I got my handicap in golf down to a 5. It was great. Things were good, Paul. But we were just about ready to have our first child, and the confidence of a salary with variable comp, I ended up taking the role. And I tell you what, is the best business decision professionally that I've ever made in my life. Being at Allianz Life for 22 years, the people I ran into with Don Urban, Dan Rourke, the Dennis Browns of the world, it was just remarkable. And I haven't looked back since. And so about 2006, I ended up getting into the IMO space. Allianz Life asked me to take over all the IMOs that they owned, which was about 13 of them at that time. And right now at AmeriLife, it's a little bit deja vu, because right now I've got about 14 IMOs that I'm responsible for. So 22 years at Allianz Life, and I'm almost, it'll be at the end of November, it'll be 2 years here at AmeriLife.
That's really cool. So you're like the president of retirement wealth at the company. What's your goal, and what are you guys trying to accomplish there?
Well, obviously, number one is we want to continue to grow and build and do that organically. But, as you know, within AmeriLife, I mean, one of the things that's happened over the last 4 or 5 years is they've been growing through M&A. So, obviously mergers and acquisitions and bringing on new entities. So we've done that. That's still going to be the goal here in AmeriLife. We're going to still do some of that, but we've also got to grow organically. And so my job, what I'm basically asked to do is to build out the infrastructure, and I would say the infrastructure of our organizations, but also the agent advisor experience. We've got to find ways, Paul, to continue to move down the path of meeting the agent and the advisor where they want to be met, help them get to their next level, wherever that might be. What do they want to be? Where do they want to go? We can't stay stagnant. We have to grow with them. And that can be anything from, helping them, build their skill set, leads, seminars, TV, radio. It's across the board, right? Because every advisor, every agent is going to be different than the next one.
Yeah. So give us a little background about AmeriLife. You guys are, one of the largest distribution companies in the life annuity and like Medicare and senior benefit space. Tell us a little bit about the company.
Yeah, sure. They started in 1971, just outside of Tampa, Florida. It really started as a life and health insurance agency. And they were building retail life and insurance agencies here in Florida. Kind of grew that to Georgia, North Carolina. I think today there's over 50 different retail agencies across about 12 states. And then in about 1983, they went into the annuity brokerage space. And that's kind of where we are today, right? Really, the big change for AmeriLife came in about 2016 when Scott Perry took over. And that's where the M&A and the growth really happened from that, not just an organic growth and building from within. The accumulation retirement income division, that's what I'm responsible for, about 14 affiliates. The majority of what we do is annuities. That's what we have. We'll touch about $11 billion of annuities this year. AmeriLife as a whole will be about 15, 16 billion. So there's other places within the organization, whether it's through the RIA channel, the broker-dealer channel, health, life, that are doing another $4 or $5 billion premium.
So where do you see the space going? What does next year look like for you guys, but also as an industry? We've seen really high interest rates over the last few years, which have been great for annuity sales. What happens, when it gets kicked back a little bit? Do you think the enthusiasm will continue?
I do. I mean, we've got what, 10,000 people a day turning 65 still. We still got a tail on that. That's obviously number one. But if you go back, what was it, 3, 4, 5 years ago, interest rate environment, the 10-year yield was, the 10-year treasury was probably at what, 1.5, 1.25, maybe even got under 1 for a little bit, right? Mm-hmm. I mean, even if it comes down from the 4.25 that it's at right now into the 3.5 range, we've still got amazing consumer value in our products. So you combine that with where the product is today versus maybe where it was 5 years ago. Even today, you've got about $6 trillion of assets sitting in money market, CDs, and savings account. Why is it there? It's, you got 4.25, 4.5% that they're making on that. Maybe some of those folks even got 5%, 5.5% at one time. They're going to need to put their money to work somewhere else. Versus if that rate goes down into 3.5 range. So where are they going to put it? Safe money. So I think fixed index annuities, the annuity industry, I think we've still got a long tail left of positive opportunity.
Yeah, it seems like a lot of the media coverage has changed about annuities over the years. You guys do product development as well. So you're designing products. Where do you see the future of the products and how are they evolving and will continue to evolve in the future?
Well, you look at 2022, I think was the Secure Act 2.0, right? You have a situation where the opportunity to bring annuities into the 401k market opened up. So consumers are finding and hearing the word annuity, and they're learning about annuities much earlier than they ever did. You've got 20-year-olds that are looking at their 401k, and they might have an opportunity to see some sort of an annuity in there. Mm-hmm. I think there are folks that are looking at that, Paul, and thinking, oh, they're kind of coming into our space. But I see it as education. I see it as making our products more mainstream. Yeah. So as far as product development in our business, I foresee that we're just going to continue to grow and make our products more mainstream because, and they will continue to innovate for consumer needs. We've seen that over 10, 12, 15 years, right? I mean, you've been in this business a long time as well. The products of 10 years ago are so much different than they are today. And I think that's going to continue to happen. And the best thing we can do is continue to talk about annuities and get them out there in more ways than we could ever ask for. And it'll just continue to innovate. So we're at the forefront of that because we're working with a lot of carriers. We've got actuaries on staff here at AmeriLife as well. And then we're on the distribution side. And we're also on the retail agency side, right? So we've got all three of those markets that we're tied to on a daily basis. Mm-hmm. That's going to help us in all three of those other parts that we want to continue to grow in.
So it's interesting to learn about your retail business. What have you learned from the retail businesses?
Yeah, it just gets us closer to the day-to-day consumer and the sale, right? So we have the opportunity got an individual by the name of Frank Tibiani who runs the career retail shop. Frank does a great job. He's got great agents and advisors across the country. And it just gets us closer to that sale. And that's where you really want to be as many times as you can, because that's where the business is done. So the closer you are to the consumer, the closer you are to the sale, the more you understand what's going on in the industry and where it's moving. And that just puts us right there. And it helps us in our product development. It helps us when we're working with the wholesale organizations about what can we do to help the agent or the advisor with their consumer.
So let's go to the retail advisor. What are some things that you guys do recommend or are seeing right now in the advisory space for annuities?
So I'm a huge believer in holistic planning. I think that's where the future is. I think that's where it's going. I think that's where a lot of folks are today. To make sure that when you sit down with a client, you're not just trying to solve one situation or one problem for that client. You're trying to solve all of their situations and all of their problems and all of their issues. Whatever's on their mind, that you have the ability to solve all of that. And that's where the market, I think, is going. That's where it should go. We shouldn't be having, somebody go into a client's house and just looking at one product. Yeah. I think they should have multiple products. And so I think that's where it's going, Paul. I think that's where it is today. That's where we're heading. We're going to continue to help the agent and expand their portfolio so they can help more clients.
Okay, so how are you helping agents expand their portfolio?
Yeah, I think it's really around marketing. It's really around education. It's really around knowledge. So we've got a really large marketing team that helps agents and advisors with prospecting, lead generation. How do you go through a portfolio and look at analyze a portfolio? What software do you want to use with your clients? Radio, TV. How do you do a seminar? How do you set up a seminar? How do you get in front of more and more clients? So we're doing all of those kind of things to help our agents and advisors just expand their opportunity and their ability and their skills and their knowledge.
So prospecting and lead gen is like one of the biggest issues for most advisors.
Yeah.
What are you seeing working today?
I know
you guys are doing a lot of different things. What are some of the most effective? Yeah.
I don't, I think that's, that question doesn't have one answer, because every agent advisor is just different.
Yeah.
There are some I've seen agents or advisors try to get into seminars and they're not real good at it, but they are good in other aspects. They're very good in front of a client. So you've got to find what you're good at. I've seen some folks say radio is the way to go. Well, radio isn't really the way to go if you don't have a good branding campaign already. You need to, radio is just a part of it. It's certainly not going to be your main lead generation. TV probably won't be either. So I think each agent advisor has to know who they are, what they're best at, and how they are better at working and communicating with clients, because not one size fits all in any part of that business and lead gen.
So what do you think about?
I jumped around that question a little bit. That's my answer.
Keep going.
No, but that's my answer. It's like, if everything is a nail and you have a hammer, that doesn't work in our business.
No. Everyone needs to find what they're best at and what, they're comfortable doing. And you got to do more than just one thing.
Yeah, there's no silver bullet, right? I mean, and we, in this business, as we recruit, we try to bring on more agents and advisors to our organization. We're kind of out there with that one silver bullet and trying to get people to get excited. And it's like, there just isn't one. I mean, we can do that to kind of create and generate interest. But at the end of the day, you really have to sit down and say, what are you good at? What do you like to do? How do you want your business model to look? And there's so many different ones out there. And you just got to find the one that's right for you, but don't try to be somebody you're not.
Yeah, I think that's a really good statement. Where do you see advisors failing today? Not that all of them are, but like the ones who are struggling, what advice would you give to them?
I would tell them, we're using the advisor word here really generally, right?
Yes.
I do think if we're talking about folks that are using one product or two products, I think they need to be holistic planning folks. They need to sit down with the client, and I think they need to talk about the client's family. They need to talk about the client's children. I mean, I'm a big believer that when you're sitting down doing a financial plan with the clients, bring the children in. start talking about your parents and where they're going, and get your parents the parents comfortable to bring their children in to talk about their situation. But if I was to pick one spot, I think it's always chasing that silver bullet, right? It's like, well, what can get me to the next level? What don't I do today? And trying to get out of their comfort zone to be somebody they're not. I think you've got to stay on that straight and narrow, and you can keep expanding, but you got to do it in the right times, and you got to do it within your personality and your comfort zone.
What are your thoughts on, I'm going all over the place because that's what
all good.
That's what I do. What are your thoughts on RILAs and their place in the market and how that's going to continue to grow into the future?
Yeah. So today at AmeriLife, we'll probably do about, from a wholesale perspective, about 100 million of RILAs through our system. I think they're a great product. I think they fit a need for some clients, and I think they'll fit a need for more clients down the road. I look at fixed index annuities and RILA kind of almost working with and against each other depending on the market. And what I mean by the market is not just the stock market, but the interest rate environment. When the interest rates do go back down, let's just say they go down under 3, I think RILAs are going to look even better than they do today against what a fixed index annuity might look like. But when you can today go out there, and I know it's dropped under 10 today, but if you were able to get a 10% plus cap on an S&P and a 0% down, why do you need to go find a 12 to 14 on the top side with a 10 or 15%, 20% down? So I think, but they'll work with and against each other at times in the environment we're in. So I think RILAs will continue to be a strong product. I think they will continue to be a big part of the business model. And we see a bright future for them as well.
How about MYGAs? MYGAs have been really hot sellers because the interest rates have been high. They're starting to come down a little bit, but I think we got a little bit of a tail here. You see that a big opportunity there?
Yeah, definitely. I mean, MYGAs have their place as well, right? It's kind of the money that's sitting in a money market or maybe sitting in a savings account. And if I put it away for 3 to 5 years, I can get another percent and a half, whatever that might be. And I think, again, are they the nail and we're the hammer? No, I think it's just, you got to look at the portfolio and what the client is looking to do. And I love the fact of maybe putting some money into a MYGA, maybe putting some money into a RILA, maybe some money into a FIA, maybe some into the stock market. I mean, again, it's diversifying your
holistic. Yeah, exactly.
Yeah. The other thing I would say, we haven't touched on it, Paul, but is within a fixed index annuity, making sure you also diversify within the index options that are there. I'm not a big fan of just putting it all into one index. I think you should use 2, 3, 4 different indexes because they all kind of work against and for each other based upon what happens in the market. And we know one thing, we have no idea what the market's going to do tomorrow.
No kidding. It's been a wild ride.
It is. And it will continue.
It's always going to.
Yeah.
Fortunately, it's been doing very well.
That's good.
We can't complain about that.
No, I'm pretty happy with that too.
Yes. So one of the big parts of your business, and I know you don't run it, but I personally see it as a huge opportunity talking to annuity advisors, is leveraging the Medicare side of the business to bring people in, and because you need to start looking at all their finances and such. Are you seeing that as a huge opportunity for you? Do you think annuity advisors or somebody who's in life insurance should be looking at this?
Yeah, both ways. So we for sure at AmeriLife have not solved the question, right? And we haven't figured out how to make this work across the board with health insurance, life insurance, and annuities. But it is a big part of what we're talking about every single day. We have folks in our affiliates, like over 100 different affiliates here at AmeriLife. And a lot of them do Medicare business, right? And that's kind of their specialty. And we've got some that do life insurance, that's their specialty. And we got some that do annuities. We are all talking to figure out how we all work together, because the one thing we do know is they're in front of clients and consumers. And the number one thing all 3 of those groups do is they help and support clients and consumers. And all of those folks need all of those options in front of them. So yes. Do I have the answer? No. Do I want to know the answer? Yes, I want to know the answer. So if you have it, Paul, I'd love to hear it from you. But yes, we're continuing to go down that path. Our vision, our strategy is figuring out ways to continue to bring all of those products to all of the folks that are in front of consumers to help support them.
I do have some ideas. We'll have to talk about it
I
offline.
love it. I love it.
So mergers and acquisitions has been a really big part of your growth strategy. And I I think a lot of the acquisitions that can be done have maybe already been done. What do you see as the future in mergers and acquisitions?
Yeah, I don't know that I would agree with that. I think
Okay.
a lot. Yeah,
Fair,
no, I
fair.
think a lot has been done. I don't think it's. I think we're going to continue to see organizations out there need a few things. One is they're going to need partners, as scale, as opportunity, as being able to invest into their future. I think they're going to continue to need that. So why does somebody look to sell their business? I need capital, I need partnerships, I need resources. I don't think that stops. There are folks every day coming into our business, and especially on the wholesale side, that are growing, building, and they've got a new idea, a new market, and I mean we see them all the time. I run into them at the events that you and I run into in other places.
Mhm.
Also, you're going to continue to see folks that need succession planning, and they want to talk about what's next. Whenever I talk to somebody about when's the right time to actually talk about selling my business, I think it's probably at least 3 to 5 years before you want to actually get out of the business, because your company is worth more if you can spend those 3 to 5 years growing it and building it versus I want to walk out the door tomorrow.
Yeah.
So yes, there's been a lot done. I 100% agree with you, and I think you're right on that. But I still think there's much more out there. But we're going to continue down that M&A path. But we're also going to continue to build out our infrastructure, our foundation, and how to continually increase that advisor experience from an organic perspective. And I
Mhm.
think when we do that and we get better at that, some of those other folks that may have been on the sideline will look and go, wow, I could use that support. And so I think it might even generate that next level of opportunity in the M&A space when they really see a strong foundational infrastructure that we're building out.
So tell us a little bit about your infrastructure. What makes AmeriLife different?
So a couple things. Number one is probably the way we go to the market. We're looking for partners. We're looking for people that want to be part of our growth initiatives and our vision and our strategy for the next 5 years. We're not looking for folks that are ready to, turn in their keys and go retire in the Florida Keys tomorrow.
Yeah.
We're looking for folks that want to partner. So that's one. Number two is we're spending a lot of time, effort, resources, money on building that infrastructure, that technology stack, that platform that our distribution partners can tie into that maybe they couldn't spend and get those resources on their own. And that's really what we're trying to do. And I think if you ask a lot of the different organizations that kind of are out there that look like AmeriLife, we're all doing a similar approach, trying to build that tech stack, build that foundation, build that infrastructure.
So what are you doing that's exciting on the tech side? Where do you see that going to?
Yeah, we talked, I think, I don't know, a couple weeks ago or a month ago when we ran into each other. I think it was DC, maybe. I can't remember where we were, but we're somewhere.
No, I think it was in Dallas, right?
Was it? Yeah, you're right. It was Dallas. So
Yeah.
it's amazing when you're all across the country. You
I
can't
know.
remember where you last week, but AI is obviously a big conversation that's out there, and I think some people are scared. Some people are excited. I think it's going to revolutionize a little bit of how the speed and accuracy that we can bring to the market. And what made me that, Paul, is as long as you control it within your controlled environment, it shouldn't be as scary as people think it is. I look at it as helping support, whether it's our field support operations people, our licensing folks, our marketers. I mean, a lot of IMOs today, AmeriLife being one of them, I mean, we have well over 50 carriers and probably 300 different products. And to have a knowledge of all of those is impossible. But if we put that into our controlled system and environment and use AI to ask a simple question like, what carriers and products offer increasing income? And in 3 seconds, I have that answer. I am faster, I'm better, I'm stronger than I was yesterday. So that's obviously I kind of went off there, but
Yeah.
EAP is EAP, Firelight, those types of things are big, making sure that everybody has access to that. Suitability, using all of those kind of things to just, again, go back to the one thing that matters, and that's the advisor experience. And that's where we get a little bit closer, Paul, on, having that retail agency model helps us even
Mhm.
closer with that because we're that much tighter with the consumer and the client, what they're looking for, and the advisor.
Yeah, I think that's something unique that you bring to the table.
Yeah,
Absolutely, to help them. And I don't think AI should be scary.
I agree.
I've been in the business a while, and there were people that didn't like using their computers to do illustrations
Sure.
at one point. And now I think AI is an enabler to be better, faster, stronger with your
Yep. Yeah,
clients and give them more services.
I agree. I agree.
We covered a lot really quick. Is there any questions that I didn't ask that maybe I should have?
I don't know. Nothing that jumps out at me. I think, I would probably just tell you, I think the future it's only going to get better. I mean, we're at a great spot in this industry, and the innovation and the opportunities that we continue to bring. And when I say we, I'm in the industry as a whole.
Yeah.
I would be really surprised, Paul, in 10 years if annuities aren't just so. There's an opportunity to double what we're doing today because they become more mainstream. I can't find a reason why a consumer wouldn't want today's annuities somewhere in their portfolio. I can't find a reason. And I know there are folks that are going to tell me there are reasons, but they do, and they can continue to innovate. And I think we'll continue to see opportunities for that. And I think we'll just have more and more people get comfortable with the idea of an annuity.
So one of the things that you guys do, and it just dawned on me,
Yeah.
is that you bring new people into the industry. Like you have organizations that are
Yes.
bringing new people into the industry. And I think that's really critical for this industry to grow because a lot of our industry is aging out. How do we bring more agents into the business, and what should advisors be doing to replicate themselves?
Yeah, so that really gets into the side of that retail agency model that AmeriLife has, and they really are bringing new folks into this business every single day. It is an expensive model, though. I mean, that's why the Prues, the Mets, got out of that career model. It just got expensive. So I think we've got to evolve. We've got to continue to go down that path. The training and education and skill set growth has kind of gone away for a while, right? Like all it was is, try to get more sales. And so if you look at a lot of the large IMOs today, they have a really big part of their business in practice management, education, knowledge, all of the things that, you would look at and you would say, those are things that some of the organizations used to do in the 80s. They're doing it now. And they're bringing in, and where I see most of the new folks coming in our business is coming in underneath an experienced advisor, an experienced agent that's been in the business for 20 years, and they become a junior for a while. Then they maybe take over that business or go out on their own. But our models are set up to continue to train and educate those folks that are just getting in this business. So I think we've grown leaps and bounds in the last 10, 12 years in the IMO space.
What should advisors be doing? Because advisors a lot of them need a succession plan. Like
Yeah.
one of my good friends is, trying to get, another RIA into his business, and he doesn't know where to start. Like where do you start in trying as an advisor to replicate yourself, to bring somebody in? Because it does seem daunting to a lot of people.
Yeah, we do that every day. I mean, we're having conversations. I've probably had 3 in the last 2 weeks with advisors that are either looking to sell or actually looking to expand.
Mm-hmm.
And so we have an opportunity to find both of those sides, marry them together, and find a good partnership. And so I think the first thing I would do is, who do you work with? Do you work with an IMO? Do you work with an RIA? If you haven't asked the question to that RIA, to that IMO, to that organization you're working with, you probably should. because I can pretty much guarantee you that there are having those conversations. They just probably haven't gotten to you yet, or you haven't asked the right question. But those things are happening today all the time. So I think you got to find that spot. You got to ask that question, and there is opportunities. There's knowledge. It's all there.
The help is out there.
It is. It is. You just got to ask.
Well, Brian, this has been a really good conversation. I think we've covered just about everything that we can cover. You were awesome. I always enjoy talking to you. You're a very dynamic human, and I'm glad that we could share the story with our readers.
Awesome. Awesome. Look forward to seeing you the next time.
Absolutely.